What's up, everybody? David Yang here again with Home Sellers. I want to thank you all for tuning in to another episode of Real Talk, where I talk about real estate. In this week's episode, we're going to be talking about none other than home mortgage interest rates and what the Fed is possibly going to do to the housing market. Now, before we get started, if you could do me a big favor by smashing that thumbs up button below and subscribe, that really helps out the channel, it helps out the algorithm, and it really helps me out by taking my time to put together all this information for you. Okay, so what did the Federal Reserve just do recently? Okay, just a few days ago, the Federal Reserve raised their benchmark interest rate, okay? And that's the federal funds rate. Now, that's totally different than the mortgage interest rate, okay? Now, the reason why I bring that up is because even though the federal funds rate does not directly influence the mortgage interest rates, what they do indirectly influences it, okay? And if the federal funds rate goes up, you can kind of guess what's going to happen to the mortgage interest rates. Now, the reason why mortgage interest rates starts to get more expensive is because the people that are doing the lending, the banks, the people that lend to people to buy homes, okay, it's costing them more to borrow money for them, okay? The federal funds rate is what's the cost for banks to borrow money between each other. If that goes up, obviously they have to pass the cost somewhere, okay? Now, again, it doesn't directly affect mortgage interest rates. Mortgage interest rates, they follow more of the 10-year treasury yields, okay? So that's kind of how mortgage interest rates work. But pretty much what's happening now is interest rates are going up. They're at about 6% as the time of me making this video, okay? As opposed to about the end of last year, they're roughly around 3%, okay? So let's take, for example, a house that's around $250,000 here in the Twin Cities. You know, you're gonna pay, if you're talking about last year's interest rates of around 3%, you're going to be paying roughly around $1,200 a month, okay? So that's $250,000 at 3% interest with tax, insurance, and those things, roughly around $1,200 a month. But with today's rate of around 6%, that same $250,000, everything else being equal, at a 6% rate, that's going to cost you roughly around $1,500. So roughly around $300 more, okay? So you can see that starts to eat into people's budgets. Now, why are interest rates going up, and why is the Federal Reserve raising interest rates, okay? So what the Federal Reserve is trying to do is they are trying to slow down the housing market, okay? And it's no lie, it's no cover up, nothing. You can go and read exactly what the head of the Federal Reserve, Jerome Powell, has said. He said that they are going to possibly have a correction in the housing market. That's a possibility that the Federal Reserve is thinking about in the coming months and year, okay? So the actions that they are taking could possibly cause a housing correction, all right? Now, I'm not trying to guess what's going on, but if I did, I would say there is going to be a correction, okay? Because obviously if the Federal Reserve is doing their tightening and they're already saying that there could be a correction, there possibly is going to be one, okay? I think it's a good chance there's going to be one. Now, let's talk about what a correction is, okay? So correction is usually a 10 to 20% decline in prices in the housing market, okay? Usually more than that, it'll be considered a crash, but we're looking at more of a correction, all right? Where we are right now, we're correcting a little bit right now, more towards a normal balanced market, all right? So if we look at those old interest rates again, 2%, 3% interest rates, that wasn't normal, okay? Interest rates at that low of an amount can't really be sustained for long. The reason why interest rates were that low was to kind of get the economy going, okay? Now, again, the Federal Reserve, they look at all this stuff. They say, okay, if we want to get the economy going, how do we do that? How do we get the best bang for our buck, okay? Housing. We get housing going, okay? Because, you know, every purchase is going to be around $200, $300, $400,000 a pop. Okay, so that's a good way to get the economy going. But when you slow it down, that's how you want to slow it down too. Okay, now there's other things that they're trying to slow down, but housing is a big one because we've had double-digit gains in prices recently. Okay, so what they're trying to do is they're just trying to slow it down, all right? And by them slowing it down, hopefully that will help tame inflation on the macroeconomic side, okay? Now, again, this is a really kind of in-depth video about interest rates and what the Federal Reserve is going to be doing to the market in the coming months and possibly years. So what you should be doing with this information is thinking about, okay, do you have enough money saved up to purchase a home or to do whatever it is you need to do to weather the storm that's coming, okay? And if you do need to buy a home, what's the reason why you need to buy it, okay? Don't try to time the market. If you have a need, do it now, okay? And if you're trying to sell, same thing. Don't try to time the market. If you need to sell and you have to do it, just go ahead and do it, okay? Just make sure that you get good advice from good professionals. If you have any other questions about interest rates, the housing market, what's going to happen, go ahead and leave a comment in the section below and let me know what you think is going to happen. I'd definitely love to hear what you guys predict that's going to happen in the coming months and years, okay? If not, I will see you guys next week on the next episode of Real Talk.